Welcome to PhillipCapital's Weekly Market Watch. The matter of the China yuan has been hotly contested in recent times, with many US officials calling for the appreciation of the yuan. What does this mean for the global economy? Mr. Liang Shibin from the Phillip Securities Unit Trust Department joins us today to provide us with more insight into the yuan story. So Shibin, do you think that the appreciation of the yuan will resolve the global imbalance issue?
I think that the yuan and US dollar currency issue will form an important part of the international policy debate in 2010. There has been a lot of international pressure on the Chinese policymakers to appreciate the Chinese yuan currency because of what many economists call the global imbalances on the US deficit and Chinese surplus. Although I agree that there needs to be a sustainable global shift in savings, investment, and consumption patterns, the yuan appreciation is not going to solve the global imbalances. I say this because back in July 2005, Chinese officials let its currency appreciate, and over the next 3 years, yuan gained 20% against the US dollar. During that period of time, the US trade deficit with China rose from 122 billion in July 2005 to 266 billion in December 2008, which is a 120% increase.
What factors do you think will encourage the Chinese government to let the yuan appreciate?
Moving forward, I see two possible factors which are likely to motivate the Chinese government to appreciate the Chinese yuan. The first scenario can be due to the undervalued yuan importing raw materials at a substantially higher price levels. Higher imported price levels can be brought upon by price inflation in raw material countries such as Australia and Brazil. This is commonly known as the imported inflation. Given that the Chinese policymakers have been tackling the domestic inflation with a series of tightening measures at the start of the year, I believe they are committed to contain imported inflation by allowing their currency to appreciate. The second factor which could motivate China to allow currency appreciation will be export growth. The Chinese official would want exports level to be sustainable over the next few months to justify a yuan appreciation. According to the December numbers, China's export ended its 13th month of decline with the help of the Chinese government export facilitating incentives. Therefore, I believe that the Chinese government will start to appreciate yuan only if it is in the national interest to do so.
Will the US tariffs on Chinese goods create a drag on Chinese equities?
In my opinion, I do not think that the Chinese companies will be affected much by the US taxes and tariffs. In fact, I believe that China will remain a good destination for investment in the year 2010. In terms of valuation, the MSCI China is trading at a trailing PE ratio of 20 and forward PE ratio of 14. Given the recent market correction, I believe that there are opportunities to take up position through unit trusts which invest directly into China or Greater China equities. However, China equity funds are very volatile, and investors should consider adopting a buy and hold strategy in the medium term to ride out the highly volatile market.
Thank you, Shibin. That's all we have for you today. Tune in next week for more market updates.